I mean, we speak in Germany for years about the refinancing wall and that it puts pressure on the selling side. And I think we have 13 billion of maturities of CMBS loans this year, and we see that the market participants getting more desperate now. I mean, so far, we haven't seen a lot of CMBSs which defaulted. I mean, why is that? I mean, the servicers extended as much as they could. A lot of CMBS had an enforcement tail of 5 years, so they're still 2.5 years good to go. But I mean, they are running out of time now. So yes, we would think that the pressure on the sellers is rising and eventually will lead to more opportunities in B or C locations.
I would take it as a slightly contrarian opinion, because I think that prime is sold out in Germany, and I think that global capital is flowing into Germany, or even a lot of the Eurozone capital is flowing into Germany, and everybody wants to have it parked safely inside of Germany. And just covering, the mainstream press, you certainly read these articles how attractive Regensburg is as a real estate investment location, and then Nuremberg and places suddenly come up, and then you read about how nicely rents are developing in Leipzig and places where a lot of people wouldn't have touched the city in the last 10 years. And I think in the end, there's just an overhang of capital that wants to be invested in Germany, and not enough product on the market. And people will sort of go down from prime to, core plus locations, and they will take a little more risk and sort of not see the risk and push it away and see the good returns that you still get in the 20 cities that are behind the big seven. And they will feel wonderful getting, a 9% yield in Fulda or places like that. And not, and push up prices. So I think that actually the abundance of capital flowing into Germany will create higher prices for more difficult product.
And there's no issue here in Germany in terms of product like, for example, there definitely is in the Netherlands in terms of stock that is simply not going to be refinanced by anybody and ought to just become a playground or a farm or something.
It's very limited in Germany. We don't really have the same market for office property development here in Germany. There are places, our office is in Eschborn outside of Frankfurt. Some of those buildings are definitely comparable to the Dutch buildings that will never find a new investor or a new tenant. If you go over the river into Niederrad, when you drive towards the airport, you will see a lot of empty office buildings that, in my opinion, will never, they should build a shopping mall or something, but they will not ever find office tenants again. But that's a very isolated problem. You don't have that in the other cities regularly. It's more a Frankfurt problem because Frankfurt historically just built up a lot of office space for the financial services sector, but you don't have it nationwide. And so I don't think we will see similar things in Germany. And what we also don't have is the surplus stock that was built up in places like Spain, or we never really, when money was cheap, we never really had, we had that after the wall came down and things were built in Eastern Germany that should have never been built, and they were just built out of tax incentivization and sort of a rush in property development. But that has been digested in the non-performing loan wave between 2003 and 2006, and some of them have been scrapped, and others are sort of just being picked up by the market. But we never had a builder's boom that in the years with very low interest rates and aggressive LTVs. Anybody in Germany started building, these cities outside of cities that are not occupied. And in general, macroeconomically, I think we don't have enough resi. We have definitely too much office, but at the same time, the economy is growing, so it'll grow into it.